Hey, what's going on, traders? Good morning. Welcome to the Wednesday webinar. Let me mute that. All right, there we go. Good morning. Hey, sorry for college kid attire here today. We had some drama in the Gordon family last night. Jakey wouldn't, my son Jake wouldn't take a shower, so he lost his iPad last night. He's supposed to do a school reading. We had to get up early this morning, so we had to do all his reading this morning. So no time to look presentable. But good morning, guys, and hope you're well. Just reading through the top 5 things to know. You know, on CNBC here this morning, something about Elon tweeting about Baby Shark. Coinbase now offering Dogecoin. I mean, just the insanity continues. It's crazy. Top 5 things you need. You don't need to share the screen, Bennett, but number 1, June begins with muted trading on Wall Street. Okay, no big deal there. Oil prices. AMC soars again as it aims to connect with investors. So AMC is ripping. Elon Musk tweets sending shares of Baby Shark, a Korean publishing company, through the roof. Number 4, Coinbase Pro gives users the option to trade Dogecoin. And what's number 5? Oh, cyber attack on a meat plant. World's insane right now. I swear it's insane. You know, or are we starting to move into summer trading? You know, have the reopening play been priced in, and things are starting to slow down, and the headlines and attention starting to shift. I don't know, but I just cracked up reading those top 5 things you need to know. Again, put yourself 2 years back in time, put those 5 headlines you know, in front of you, you would have said, like, what the hell is going on here? All right. So we are short Terry today. We're not short Terry. We're very long Terry Long. See what I did there? Terry is helping his son move following college graduation. So I'll be doing sector rotation. Alex has got a lot to show you today with crypto. Macro. Bennett will be doing the Elliott Wave pilot stuff that he does so well. And I'll start you off here, Bennett. I'll take the screen if you don't mind. But what's going on with you guys? What's up? What do you think about these? You know, what do you think? I mean, are we living in an alternate reality? Are we living in a what does Elon say? Help me out. What's it called? Not an alternate reality. Bennett definitely
simulation.
Knows what it is. Thank you, sir. Simulation. Doesn't it feel, Bennett, doesn't it feel like we're living in a simulation at this point?
The further we get into 2021, yeah.
It's just bonkers. All right. So let's kind of start with some macro stuff up top. And I thought the PCE numbers, of course, inflation is very, very important right now. You know, we moved up to a 3.6. I think the actual number is 3.8% year over year. Personal consumption expenditure, which is the Fed's preferred gauge of inflation. That's a pretty good move here. So inflation just continues to tick up. And the big controversy, and it's really important, is you know, with the way the stock market and sector rotation is happening right now, is it here to stay, and is inflation going to continue to rage, and is it a self-fulfilling prophecy, meaning the more we talk about it, the more it happens, or is it truly on the supply side and it's transitory in nature? And once the supply side of all these inputs that are short in supply, like lumber and semiconductors and all these different things, you know, once the supply side catches up to demand, will that start to moderate? And that's the big question. Crude oil is making a pretty good move up. Energy's been really, really busy. It's the best performing sector of the year, which is unbelievable, coming from last year, which technology just ripped, and now all of a sudden energy. I mean, I think so few guys had that. So first thing I wanted to do is show you this chart. I came up with wide charts, real simple. This is a PCE chart, oops, didn't mean to do that. Personal consumption expenditure chart. Year over year change. There's that bump up to 3.58%. And you can just see, doing a little bit of technical analysis, we are at trendline resistance. So source from the 1990 peak, which I have to think that was the first Gulf War, I believe. as inflation was pushing up there, following probably I think actually crude oil inflation kind of ramped hard into the first Gulf War. I hope I have my history right. And as soon as bombs started flying in the first Gulf War is when crude oil sold off. Very interesting kind of lesson in your market analysis. And then into the 90s, there's the 2000. This is the tech bubble pop, and then we went up into 2007 and 8 real estate. A little bit of inflation there, came off hard, and here we are again. So will we get up to 36, 37, 38? And will that break a 30-year downtrend in PCE? Okay. So looking at that, that's fine. And then I started looking at some break-even stuff. So this is the 5-year, or sorry, this is the 10-year tips, Treasury inflation protected securities over the break-even rate. This is the max. Okay, so it's kind of hard to do the same technical analysis because this tips product wasn't around forever. This is the inflation protected security. So we're at 2.4% on an expected inflation. So all that is your 10-year yield compared to expected inflation in the tip security, and that should give you the expected inflation over the next 10 years. We're at 2.4% on the next 10 years. Let me just see if I can move this thing. There we go. Get out of the way. I know you can't see that. Okay, so that's the 10-year. Here's the 5-year. We're at 2.57% on the 5-year. So we have a little bit more inflation expected over the next 5 years. We're certainly getting a little frothy there on the move up. And again, we've got to figure out, this is going to really matter if inflation is here to stay. And that's going to matter in terms of how we allocate in our portfolios and really the whole macro outlook and intermarket flow. It's very important. We haven't had inflation in a long period of time. We're starting to get pretty frothy. And again, you know, the Fed has said multiple times that they not only will tolerate, but they strongly desire average inflation over 2% for a period of time before they would start to raise rates. Now, there's already a lot of talk about them tapering bond purchases, 100 whatever billion per month in Treasury and mortgage bond security purchases. So there's a little talk about that, but we're certainly a long way away from actually doing anything, I think, and then certainly raising rates. So inflation needs to average over 2% for the Fed to do anything. Crude oil is certainly acting pretty interesting here. There's a lot of movement there with OPEC. They're undoing a lot of supply cuts that they had. Again, this whole concept of overreaction. Let's call it, how do you retool? What's the opposite of retooling? You know, scaling back production as COVID was happening, and then all of a sudden we're having this snapback effect as the economy is the bull market that was in place pre-COVID is now raging on, and the suppliers who scale back said, "Oh God, we gotta turn everything back on." So oil is no different, and OPEC is undoing some of the supply cuts. And who were the big names that came back? I'm trying. I had two big names: Saudi Arabia and Russia. Amounted to a continued winding of steep cuts they made at the start of the pandemic. So yeah, Saudi Arabia and Russia coming back. So I thought this chart was interesting too. This is the 10-year yield on the U.S. Treasury over crude oil, and you know, as we just pulled the 10-year aside on the continuous contract, and it's always a little tricky to do technical analysis, guys, on the continuous contract, because you know it's kind of hard as you roll from one futures contract to another, and how the two rolling contracts meet up, and it's hard to kind of do technicals that you can really rely on with that, in my opinion. And then this is, of course, crude oil going negative in that whatever March or June contract of last year. But we are starting to break above trendline resistance here in crude, and that's pretty significant, I think, if you look at this chart. And again, we got to take it with a little bit of a grain of salt, because that continuing rolls contract kind of skews things a little bit. So certainly interesting. I know Bennett's going to do some work on that. So let's pull this guy up here quickly, and you can just see where I'm going with this. Not kind of a loosey-goosey relationship with yields and crude 2009 through 15, 14, but then all of a sudden we start to fall in line. This is the, sorry, just get this toolbar away. So that's the, oh my God, this thing's so annoying. Let's go to the weekly. And you can see that we're falling into a pretty good relationship here with the 10-year and crude oil. Sorry. All right, so then here's the daily, and you can see that this is pretty good. And what's a little concerning to me, based on that trend line analysis I just gave you on the weekly and the monthly, crude oil is starting to act a little bitish this morning as yields are starting to kind of go sideways. I'm kind of hoping that crude oil doesn't go 70, 75 bid and pull yields up and continuing to fuel this inflation narrative. So that's just the one thing that we have to watch there. All right. So another thing I wanted to hit here on the open is let's do. I just want to talk about the indexes real quickly. Bennett's going to hit them quick. I was tweeting back and forth with Tom Lee on this. He's a bit of an Elliott Wave guy, if you know him from Fundstrat. You know, the indexes are pretty quiet here, but we're seeing on the Russell, seeing small caps sort of lead the way here recently. Yesterday, the small caps were up over 1%, where everything else was mostly flat. But rut has been in a pretty much stuck in a rut, which is an Elliott triangle from Feb of this year. I think we are about done, and we seem to be moving up in wave 3. So will small caps lead us up? Just doing a typical wave 3 projection here. 100% was 2272 or through that. That puts the 1618 of wave 1 verse 3 in play. That's at 2345. And that'll put you up against the old B wave highs. So watch the rut on the upside. The other thing that I wanted to mention, and I know Bennett's going to do it, is, in fact, let me just do Apple here real quick. Talking about large cap tech, and then I'm going to roll into some sector rotation here really quickly. And I'm going to sort of skip ahead and say, look, we're starting to see, in terms of rotation versus value, which is a lot more energy stocks than growth, which Apple is obviously the poster child for big growth stocks. Apple has a similar triangle going on, but it just can't get up off the lows, which I find fairly interesting here. So, you know, we really need to stay above 122 in Apple to keep this triangle count alive, which, man, this thing's been in place since SEP of 20. So another 3 months, we've been in a year-long triangle in Apple. I want to show you some sector stuff here quickly. Albemarle, I'm going to talk about him later. I did CNBC on him, some material plays for the electronic vehicles. Okay. So check this out here. This is, I show this chart almost every week. This is a relative rotation of momentum versus value on the weekly. The center right here is the S&P. So the intersection of the XY axis is your benchmark index. That's the middle. And generally the markets rotate in and out of favor on a clockwise basis. So this goes from the weakening to the lagging to the improving to the leading quadrant. And you know, each one of these little dots along here represents a week. So here's April 30, there's May 21, here's June, and here we go. So you can see, watch MTUM, which values on the right, which means leading, momentum's on the left, which is lagging. And this is going to be April 16th, but watch what happens. And you can follow the date here, April 23rd, April 30th, May 7th, May 14th, boom. We just had momentum move into the improving quadrant while value is very much falling out of favor. So I'm a little conflicted here, guys. Apple is looking kind of weak. There is certainly a lot of technology that's acting strong to get this rotation. Value's falling out of favor while energy is acting really big. I'm a little torn in here. It's a little confusing to figure out the right move. And it is all of a sudden June 2nd. So are we in summer trading, and are we worried more about Coinbase offering Doge and Elon tweeting about Baby Shark and stuff like that? So we're still very range bound. There's some really good movement in here. You know, some one-off stories. Zoom reported earnings. I did CNBC yesterday. They had a blowout earnings on Zoom. Zoom's gotten kind of cracked lately, but looking pretty good through 350. there's some one-off stories. Roblox, I'm trading some Roblox in there. I've been talking about him a lot. So there's a lot of one-off stories, but it's kind of hard to get a read of what's happening here. And that's the thing, guys, with markets is it's not always your job as a trader or investor to be able to figure out every market every single day. It's your job to figure out when you have a good feel on the market and you want to press it and you want to get after it and say, I'm kind of in sync with the market. But when you're not really in sync, or the market seems kind of out of sync with itself, you have to realize that. And it's not your job to figure it out, right? You just kind of got to let her be and say, okay, she's a little unreasonable now. I'm not going to try to solve any problems. Other than that, news, everything's fine. You guys been following my surgery saga. I had a little infection in my knee, so I actually had to get it cut open again last week. Not like my old ACL where they went in, they had to cut it open again, clean out the internal sutures, and then stitch it up again. So that kind of sucked, but it's fine. PT later on, and yeah, that's fine. Everything else is good. I'm studying for the 65. Going to take that soon. Launched wealth management. All is well. Let's bring in the team, Alex and Bennett. What's up, boys?
Good morning, Todd. What's happening? How are you?
I'm good. Are you confused? Hey, Alex, are you confused too, Bennett, or do you know what's up?
I am. It's been a challenging market. What's interesting is, just over the past couple of days, I think we're actually starting to get some clarity in the indexes. We were seeing this kind of disconnect between a confluence of pattern developments, and I think we're actually starting to see things once again line up. I've got an interesting interpretation of the Russell 2000. It's also an Elliott wave triangle. I think the origin of it might be one swing point to the right. So we'll get into that in just a second. But yeah, it's been an interesting past couple of months, that's for sure.
Nice. Well, you want to roll into the indexes for us?
Yeah, for sure. Hey, you of course you've seen the movie Christmas Vacation, right? Chevy Chase's Christmas Vacation.
It's an institution.
When you said retool earlier, that's immediately where my brain went.
I know what you're gonna say. I'll retool you. And then he hangs up. Clark's boss.
What's going on? Oh, that was great. Hey, what's up, Alex? You've got a webinar going on tomorrow. Tell us a little bit about that, if you got a second.
Yeah, you mean we got a webinar?
That's right. Hey, I'm the co-host. This is it's your baby.
Yeah, so we're gonna talk kind of a recap whole of the crypto space from its inception, what's going on, what are the investors before and what are there now. We're gonna look some metrics, and we're gonna do our technicals and kind of see a little bit deeper what's going on all of this, how the perception of investor changes over time regarding Bitcoin, regarding some infrastructure, crypto projects. So what is for the space in the future? So it's going to be a kind of a nice wrap up of the crypto space from its beginning. So join us. We're going to give you a link, I think, a little bit afterwards. So I think it's going to be fun.
Wait, are you gonna tell them where it's going to? Or are you gonna do they have to be members for them to figure out to know where it's going, according to Alex?
You mean?
I'm totally joking.
Okay.
He's putting you on the spot.
I'm putting you on the spot, but you were saying no. It's important to know. The crypto market. It's amazing in the. I don't know. I've been trading it for 7 or 8 years now. How far it's come in 7 or 8 years, but it began much longer than that. But it's amazing how fast it's evolving. But of course, you're going to be talking about where you see the market going in the future, or is that part of the presentation?
Yeah, the presentation will be mainly based first on a sentiment change and how the investor perceive and what's our negative and positives happenings from the government side and from the investor side. So we're going to see a little bit from a bird view what has been going on. Like, for example, Turkey banned cryptos to transact at all. Miners from China now are dislocating to other countries into the world. So all of these elements, what is going on like a moving puzzle, we are going to put in one perspective and try to see our technicals is going to confirm this possible macro outlook that we are trying to align. what will happen in the future. Of course, we are going to give our wave counts and projections, what we are thinking is going to happen. But the sentiment is quickly changing. You know, you have this new babies generation in cryptos, which really does not know much about trading. So every move down, they're trying to buy in hopes that it's going to bounce back very, very fastly on a new high. And I don't think it's going to happen this time so quickly. So we are down 1 trillion on a crypto market cap in less than 1 week or 2 weeks.
That's
so if you get a total market cap of 2 trillion, you are already half down. And I don't think this is going to recover very quickly, like many of the kind of new people in trading. We have been on markets like 15 years. And we know that some of these damages, especially technical damages, do not paint a nice picture for a quick recovery. So we might see some levels which might surprise us, but I'm looking at it from the larger time perspective. I think many of these good projects which I'm tracking, it's going to offer a longer term entries, which will be phenomenal. So
that's awesome.
Lots of
good.
Yeah.
Really awesome. How do they sign up, Ben? Are we going to give, do we have information now?
Yeah, if you go to tradinganalysis.com/blockchain, you'll be met with this site here and you can get signed up. This will be held tomorrow. So this is taking place tomorrow, 4:30 Eastern, 1:30 Pacific. And I will drop that link in the chat as well.
Looks good.
All right, boys, let's jump into it. I'm going to take them through a spin of the charts in the Motive Wave platform. We'll be back in just a second. Good morning once again, YouTube. Thank you guys for tuning in, and we do apologize for getting started a couple of minutes late, getting a little closer to the start time there. So, hey, let's jump into it. Hard right edge of the Motive Wave platform. We're going to take a look first at the S&P. And what we're looking at here in the S&P, going back to, I guess this would be the March 4th lows. So out of the March 4th lows, we started to print a motive impulse. And this motive impulse, we said, look, regardless of where this fits into the higher degree picture, because the count off of the COVID lows is a little bit tricky. There's a lot of overlap, lack of clearly isolated corrections, and that makes it challenging to arrive at any high conviction Elliott wave count. And the way we were looking to approach the market back in early March was to just kind of let this 5-wave move unfold. And as that 5-wave move began to unfold, we anticipated that it would start to help us kind of identify where within the higher degree trend this might in fact land. Last week, we identified a couple of key levels for you to be watching. One of them was 127.2% external retracement of the decline that we had into May 19th. And that's continued to present resistance. We talked last week about the fact that the S&P, the NASDAQ, the Russell, all three had relatively different implications in terms of where the patterns were looking to resolve. After the move that we've seen on the week, I think we're actually starting to gain some clarity. So let's jump into it. We're going to get off the daily chart and we're just going to focus in on this 5-wave structure here. So off the daily, down to a 195-minute chart, you can see the March 4th low here in wave 2. I'm still counting this as up in 3 off of the March 25th low, down in 4. That gave us a wave 4 that was equal to wave 2. And if this is the resumption of the uptrend towards our 4,300 to 4,350 upside fib targets, then we really need to maintain this wave count and validation level at 4182. So the move off of May 12th was a little bit challenging. We had a 3-wave structure that was at work in Apple and Microsoft. So many of the index heavyweights were also printing a 3-wave structure off of the lows. And that made it even more challenging to kind of decipher where this move fits into the Elliott wave count. After the rally that we saw through the highs here, we said, okay, look, perhaps this is just the one segment of an Elliott wave pattern that doesn't quite fit the guideline of the right look, doesn't quite feel right. Todd talked about this a few weeks back, that in his 10 plus years of working Elliott and 20 years in the markets, that he's come to actually expect one of the waves within a pattern to not quite fit. So perhaps we just have to accept that three-wave structure as motive impulsive. This is one, this is two, and we either just did a completion of 1-2 with this being an ending diagonal and we're going to find retracement support here, or alternatively, and this is quickly becoming my preferred interpretation, I think the S&P is actually in a form of triangulation. So bear with me. I know leading up until the April 16th highs, we were very confident in our interpretation of the markets. It was a little bit shaky through this move here. We did a good job of identifying that 40.5 support zone. But check this out. Just bear with me for 1 minute. Zooming in on an alternate interpretation that I have, and where we're going to start this count is October 30th. So October 30th, I'm viewing this as a 5-wave completion into February 16th. That then puts us into a wave 2 correction. This is a smaller degree 1-2. This is 3, triangle 4 up and 5. And now I'm proposing we're actually in triangulation up against a wave 4 that's going to pair to this wave 2 here, okay? Check this out. Todd's always told us that markets don't repeat, markets rhyme. So if I just take you down to the 1 hour, and let me just quickly get rid of my showing of the lines here. First of all, you should notice a bit of a similarity in these patterns already. But let me walk you through this, and it's really rather fascinating. So if I take you through the April 19th high, and we draw a trend line here in log scale through the A wave low. We then move that projection over here. Look where we're met with, the A wave low here. Let's now draw a move through A and B. Drop that right here. So the angle of descent and angle of ascent in these two patterns are identical. We're in a larger magnitude potential of this interpretation, but notice the 3-wave swing down, the 3-wave swing back, then you get C, D, and E. I'm proposing we're in the exact same interpretation. We're going to see C down, D up, E down, and then see continuation. What I love about this interpretation of the markets is this still calls for that overall resolve to the upside, which based on what we see in semiconductors, based on what we've seen out of the NASDAQ, all of those charts, and even the Apple Triangle that Todd showed you, all of those charts are healthy consolidations that we think do have a relatively good shot at resolving to the upside. So this is the S&P. In the B wave here, we did make a new high, so maybe I'm one swing point off, and we do actually push up to a new high here and then see that C wave. Let me take you over to the NASDAQ. Over to the NASDAQ, it's really rather a fascinating situation at work here. So this is our Elliott wave triangle that originates off of the February 16th high. We're going to do the same exercise, kind of measuring the angle of descent in the A wave. I'm going to now drop that from the B wave high, and that more or less takes you through to the C wave lows. We can do the same thing through the A through B advance, and you're once again more or less about the same angle of descent or ascent. The move to the downside here, check this out, moving from 3 to 4, and then replicating this move here takes us about down into E of wave 4. So this sets you up in the NASDAQ for a move lower in E of 4, and then we resolve higher. Over to the S&P, I propose this would give us C. D and E would unfold as the NASDAQ's attempting to break north of the triangle. And then over to the Russell 2000, which the Russell 2000 has been a little bit challenging because it's been implying that we've been further, we've been more advanced, so more mature within this triangle. After further analysis of the Russell 2000, I'm proposing we're one swing point off on the triangle's origin, and the triangle actually originates off of the March 13th high. Zooming in on the daily chart, that then sets us up for a wave 4 triangle that meets the NASDAQ. So this implies E of wave 4 in the Russell, E of wave 4 in the NASDAQ, simultaneously the smaller triangles unfolding in the S&P, and they all resolve together to the upside. One of the reasons I favor this interpretation in the Russell 2000 is the fact that from the March 5th through March 16th swing, it's very difficult to count that as 7 swings, which would be an ABC move. This is, in my opinion, better counted as an impulse. So this sets us up quite well for the possibility that we do get E of 4 in the Russell as well as the NASDAQ. Over to the SMH. The SMH kind of brings this all full circle in that we also have a mature triangle coming out of a possible D wave. The alternate interpretation here is that wave 4 actually ended with just a simple ABC off of the March or May 13th lows. Wave count and validation on SMH would be a move north of 257.54. So I know I threw a lot at you in this particular update. I am going to do a public video update later on this afternoon, but I just can't help but see the similarities at work between this consolidation and what we're now faced with here. You've got this move up in A, down in B, and this kind of meandering move higher, very similar angle of ascents and descents within this pattern development. So that's it for me, Todd. Back over to you.
Oh, that's really good. Very good work there, and that was really, really interesting on your the angles of A and B of lesser and higher degree. That's pretty cool.
Yeah, it's fascinating.
You know, I think that. I mean, look, we have non-farm payroll coming up in 2 days. You know, we have what? We have ISM. I think we have ISM coming up here. Manufacturing, non-manufacturing. We have some data coming up. I wouldn't be surprised to see us continue to go sideways. I don't think this market is ready to resolve. What do you think about some old school income butterflies?
It might be time. It might be time, especially if that interpretation of that sideways S&P triangle is gonna set in here.
Yeah, I like that. Yeah, really, really good work there. And then the other thing is, you know, the Russell's been so sideways. I was also thinking, what happens if we're going into one of those WX triangle Z's in the Russell? You know, oh man, that's the granddaddy LA wave corrective pattern of all. Let me know if you could see something like that happening too.
Absolutely.
But I think you're on. So let's bring Alex in here, if you don't mind. We'll skip commercials here.
Yeah, I apologize, guys. I took too much time this morning.
No, I did.
Got a little carried away.
We're just going free form here. We're not going to script. No. Alex, you ready? You want to get us caught up on some quick macro and crypto?
Sure.
All right, here we go.
Hey guys, let's go a little bit of macro, and I have seen something interesting, especially on the chart of the German 10-year yields, and people were drawing this line and kind of looking this breakout there. So as you can see, we broke kind of a last channel, and we are kind of an inflationary craze here. But look at this picture when you go a bird view. I mean, come on. So we are there. This is the 1980s, so approximately the same picture that we can see on a bond chart in the US and in Europe. I mean, we are there, guys. So RSI is kind of a 69, 79, and we are already dropping today, trading at minus 0.19 on a 10-year yield in Germany. So I think this will produce exactly what we were looking, and this is the price chart. It is the 10-year bond, but it is the opposite of yields. It's a price chart. So we are starting to go in some type of a consolidation, which might be inflationary, kind of just a sideways, while economy it's balanced itself. Support zone, it's clearly depicted here. So more or less, I think this will be a year or two of a big sideways price action until this larger deflationary forces starts to kick in again, and we go up in this wave 5, trading even above 190 as long as this support holds. So I don't see a 5-wave move here announcing a deeper correction or a potential a bigger move down in a price of the German 10-year Bund. I just only see a 3-wave, and we are starting to push today on the upside. The RSI is below 30, so we might get in the next couple of months this B wave on the upside, which means at least in Europe rates might fall down. Rates might fall down, meet some also resistance levels here, and then go up again and kind of a meander in this sideways consolidation. And I think that this will be the most probable scenario we will see. So I'm not really looking for any inflation scare. I think maybe in the United States it might be a little bit more on the upside, but in general, Fed is very well equipped to tame this move on the upside. Potentially June, July, on the next meeting, they might announce a little bit of possible tapering. We had already 2 central banks, so namely Bank of Canada and Bank of New Zealand central banks, announced a possible move in rates in half of 2022. A New Zealand central bank doesn't have such a cool before forecast on the rates. They made a lot of mistakes in the past regarding the rate policy. Canada is a little bit more on a cautious side, I think. So I don't think, as Todd very well said, we are in kind of a no man's land zone, and nobody knows what is going to happen. But I think I will go with transitory one, looking all of these technicals, and for now I will not participate in this inflation craze story, looking the higher kind of a bird view time frame charts. So for now we're going to look this to be sideways. Dollar index, it's not going much anywhere. We are seeing a kind of a more directional move to the downside. I still don't want to look this as a potential second wave or a B wave. We do a small correction and we continue in dollar moving lower. I will be more for a solution that this is the 5th wave, and we go to meet some type of a resistance on the this daily chart in this previous wave 4. So I will look maybe for a small push to the downside, some type of a low. I'm still going to look for a correction in dollar, then for a smaller one and a continuation to the downside. So having said that, I will be watching very carefully the next developments on the US dollar or DXY, dollar index. If I see a smaller 3-wave move on the upside and then we fail some around 0.618 or 0.786 and we start to push further lower, then we will be for really a more downside in the dollar. But I don't think, looking the macro picture, that will happen. Copper is trading some around our highs, projected highs, potentially a rollover. We don't still have a confirmation on that. So it's kind of, as Guy said, a mixed picture on that front. I think market will be lost for let's say maybe a week or two or even more. And then we will have some resolutions. I think these resolutions, at least from a commodity side, will be a little bit of a more on a downside. Soybean and some commodities are also posting some 5-wave move from respective highs. So I'm going to look for a correction in commodities, which pairs up with the dollar index, possibly go a little bit more higher. On the crypto space, we have seen kind of a staggering move down. In a sense of a market cap, we are moving lower in almost 1 trillion, as I mentioned. And current chart on the Bitcoin suggests a possible 5-wave move, which will give a further implication to this uptrend in the Bitcoin. If this triangle holds and we go and post a new low, I think we have to consider some larger ABC, the wave count invalidation of the further bullishness, because for now we are still looking this to be a fourth wave in some type or form of a WXY triangle or anything which can be longer in time, something around December 2021, January 2022. I don't think that the recovery will be so swift. In crypto markets, we are seeing some other cryptos, which I think they're very viable projects, also moving into a sidewall consolidation. This is ADA or Cardano. And I think also we are in some type of a fourth wave. Ideal projection for the third wave, 1618, reached here in a very clear 5-wave pattern. So I think we're going to see also a larger consolidation there. Ether is basically doing the same. So Ether on the higher time frame reached our objective. So I want this support line around 900 to 1,100 to hold, either in a bigger triangle or in some other form. So I think we are going to be in a mini crypto winter while this consolidation and macro environments adjust further for the possible move on the upside in 2022. For now, I don't think that macro environment is on the side of the cryptos. As you can see, the Elliott wave count on the stocks and on the dollar are not so positive in the next couple of weeks or even months. For the cryptos, we definitely saw margin spillover because many funds also has a portion of their exposure into cryptos, and they, I think, cut that a little bit more this time, and I think they will further cut their positions until we see a tradable lows in Bitcoin and Ether, and as well as some others. So the trend is still on the upside. We are labeling this as a higher degree wave 3. We are looking for some longer consolidation and then a trend continuation on the upside as long as this big blue support line holds. Dogecoin went today on the listing. So same situation, 3 waves down from top. We are forming some type of a head and shoulder here, as you can see, which will be, I think, more on the downside. So I'm still going to look in line with others, some type of a wave 4, even down to here, 0.5, 0.7. If we trace out the triangle, will be more sideways consolidation before we start moving into this 5-wave pattern from this March 2020 is relatively clear. It is a smaller time frame pattern because we also have a wave counts on weekly. But just looking this sequence, we have a nice 5 waves up in 1, down in 2, and then directional wave 3 on the upside. And then I think we are going to go and see a longer consolidation there before we start to move on the upside. So if you want to hear more about it, join us tomorrow. We do cover many crypto pairs and we see a similar situation there. And I think we are going to cover it deep inside from the fundamental and technical perspective tomorrow. So please join Bennett and me and see you tomorrow, guys. Back to you, Todd.
Great job, Alex. Really, really good. God, you just, yep, such good insight, man. I really appreciate that. Guys, be sure to join Alex tomorrow on the webinar. Wait, question, is this going to replace your normal crypto webinar?
You mean Crypto Lab?
Yeah, the Crypto Lab.
No, I'm going to do a Crypto Lab because Crypto Lab will be more wider in the sense of covering cryptos. So on a webinar, we are going to be more specific.
Okay, perfect. Got it. All right, good stuff. So markets are open, really good. Be sure to join Alex tomorrow, guys. Markets are open. It's really, really quiet out there. Everything, last time I just looked, it was all the indexes were inside of 0.1% movement. Holy cow. So let me share this. Thank you, Bennett. And I should be sharing. There we go. So Yeah, S&P is down 200s. Nas, now the rut's down a quarter, so that's fine. Not doing much, really anything. Today seems to be a very, very quiet day. It looks to be about AMC roadblocks. I want to talk quickly about two fun industries, not sectors. I want to talk about cannabis and I want to talk about EVs. So we did yesterday, we talked about the EV play. And I was talking about with Michael Bappas, who's a advisor at Rockefeller Capital, the Tesla Neo, and this was kind of interesting. This was a Neo chart, dropped 62% and then 54%. So I wanted to pick up where we were there on that. Come on now. Okay. This thing just went off the screen, so I can't get it. There we go. Okay. So before we do that, here's Zoom. Kind of finding some support there. Decent earnings, not much. Strong earnings. We got to get through 350 on Zoom. That was kind of the on-air play. But I wanted to show you guys the relative rotation on EVs. So this is the weekly rotation on EVs. I'd like to start on the monthly and show you again, the benchmark is the S&P. Neo is actually stronger because it's further to the right than Tesla, but we have Blink charging, which is really good. Neo, Tesla, Workhorse, and then Plug Power, which is going to be more of a battery play. But what's interesting is Neo, yes, on the monthly stronger, and Tesla, they've been falling out of favor on the monthly. They've had a really, really long drop, and that was that 54% drop I just showed you. So let me just pull that up quickly here, Neo. So this is the daily right here. This right here was wave 2, I think was 60. It was like almost perfect 62% drop. And then this wound up being a little bit less, like 50 something so far. I'm almost ready to put a wave 4 in the low. That was a 53%. I'm almost ready to put the wave 4 there. And I think I'm going to change it for now. And I will edit it if we go down and make new lows. But if you look at Neo, we're through resistance here on Neo. Okay, it doesn't matter where you draw it. We kind of broke resistance at 36. So Neo's looking good. And Neo's interesting. It's a Chinese EV play. They're proposing this this battery swapping play rather than Tesla's where you roll into the charging station and wait 20 minutes. These guys are swapping batteries, and okay, I think that's probably good, but it's also very it's able to be replicated, and then also there's a lot of concern that there's going to be a lot of wear and tear on those batteries. So in the near term, I think Neo has the advantage for now, but I think Tesla is ultimately going to be the long-term play because I firmly believe in the internet connectivity they're doing. SpaceX just launched another satellite, the other Starlink satellites, however many 100 Starlink satellites, whatever it was. They're doing actually about 50 or 60 at a time per launch into orbit, and I think just the future is going to be internet connectivity rather than these LiDAR cameras and all the sensors. And for now, Neo's got very high-end cameras, sensors, but I think it's going to be connectivity, which I think the limitations, which I don't think a lot of people are talking about with the 5G towers, which is the short range, will be overcome with the satellite. And I think internet connectivity to space, and then Tesla talking to their command centers where they're programming and they're doing all the AI stuff. The cars are going to talk to each other. I think that's how they're going to do the passenger service. So I like Neo in the near term, but I think Tesla is the way to go longer term. So we just kind of look at where we are here, sort of the same kind of triangle play. We might have another, maybe into the summer here, we'll have D&E to go in Tesla, then we'll move up. The other thing I'll notice here is, bring your attention to, is if you go Tesla and you overlay Neo, though it's come back stronger, it actually made a new low in 2020 where Tesla did not. Okay, so look at the overlay here. So we have A of Tesla, here's Neo. Tesla went up, made it equal low. C was equal to A. NEO actually made a new low, but then has rallied back a little bit sharper. So it's a little bit more of a volatile play than that. But don't give up on Tesla. I think it's long term. I cannot wait to buy more Tesla stock coming out of this triangle. I'm going to buy some longer term calls, maybe some leaps, and try to take advantage of the move up there in Tesla. Okay, so that's that. And then the other one I wanted to show you quickly before we go was cannabis. I think we're starting to make a move here in cannabis. And this is the relative rotation of pot stocks. So this is the monthly. Let's go to the weekly here. GRD, before I do that, Grow Generation has just been a massive outperformer on the long-term monthly, but on the weekly, it's been a little quiet. So let's get down to the weekly. And let's start to see, the guys have all been kind of falling out of favor, right? The solar plays, the EVs, the cannabis, all the sectors that got a huge bid after November 2020 when Biden was elected. They had the big move up, and then in February they started to back off. And then this move here, what we're seeing is, let me just show you this right here. So let's go just over the last year. Okay, so follow the time here. Okay, so here's October of 2020 heading the election. Here comes the election. Watch all the cannabis stocks go from this side to the right. Big rotation in. Boom. Look at that. Into Christmas. Huge move into cannabis. Then we roll. We're going. And then we roll into February. And all of them collective, the Biden play, again, cannabis, EV, solar, they all started to fall out of favor. Okay, so here we are into March. Now we're into April. We're rotating down. Now we go from weakening down into the lagging. Now watch, we're starting to turn back up. Okay, we're starting to turn back up. And if you look at some of the plays that are in here, GWPH, GW Pharmaceuticals is still out there. Grow Generation is starting to move up. Where's my Tilray? Tilray should be in there. I'm not seeing him. Oh, he's way down there. Oh, yeah, okay. Wow, Tilray got hammered, okay? But we're starting to see a general rotation back. If we look at some of the LA wave patterns of these guys, let's go right here. Oh, Albemarle is another one. Let me just go. I forgot to mention this one. This is another battery play for EVs. I forgot to mention that. Starting to break up through 171, so watch that guy. But take a look at some of the wave counts on the cannabis. So I think Tilray went into kind of a deep wave 4, didn't break wave 1 territory, starting to sneak back above. GRWG is one that's showing a lot of relative strength. It almost looks like the Tesla chart. Maybe one more push, and then we're going to go higher there in GRWG. A few others that I'm looking at is CGC is making a good move too. CGC. Okay, again, a deep wave 4 move. Again, this is all the rotation. This was the move in heading into Biden. This is the rotation out, but we're starting to rotate back and above as the RRGs are showing you, but the LA wave is showing you that we're starting to get a little bit of a wave 4 low. So watch these guys for a pushback in cannabis. So let's bring back the team in for closing thoughts. As I said, there's a lot of kind of new age, weird cross currents in these industries that 5 years ago we never heard of that are kind of in play here. And an otherwise range-bound S&P, NASDAQ, and Rutten. I think we're going to be looking to do some option plays, which we use for income when the markets are sideways, while trading these kind of side currents of trading analysis. So, Alex, Bennett, closing thoughts, guys. What do we leave out? Maybe throw the link for Alex's webinar one more time.
Yep, I just dropped it in the chat. I'll drop it in there again. You can go to tradinganalysis.com/blockchain. Again, that's tomorrow, 4:30 Eastern, 1:30 p.m. Pacific.
Sounds good. Alex, Bennett, great job, boys.
Good show. Viewers, appreciate it. Thank you guys for tuning in, and we'll be back, same time, same place next week.
Click the like button, guys.
Oh, the like button.
Yeah.
The like button. Yeah. Smash that like button if you don't mind. God, I sound like my kids, the YouTubers my kids watch. Oh my God. Smash that like button, like and subscribe. Do it, guys. Yeah, this is how we move up. There's so many good trading live streams out there. We appreciate you spending the time with us. So yeah, just throw it up there. Throw a question, comment, insult, what you'd like to see more of on the show. I already know the answer. More Alex. I get it. I know. Bennett, you and me might need to retire, and we'll support Alex.
Oh, I love it.
Hey, did you get a haircut?
Me?
Yeah.
I did. I got rid of the COVID length, you know.
All right, looking good.
Had to be reasonable.
Looking good. I think. Hey man, I think it's time to travel. I think I'm going to be in Texas soon.
Nice.
It's time to travel.
Yep.
Yeah,
we're getting
time
there.
to go. I got some clients in Texas. Yeah.
Yeah, Todd, just to mention the clients in cryptos and kind of a flow of sentiment really is not stable. So don't be so hurry on that. So I mean, it fluctuates greatly.
Did you just call your clients unstable?
No. I just said that the client audience is pretty unstable, going with these sentiments up and down. So
Gotcha.
it is still market which doesn't have a stability. So I mean, it will take a lot. I think in the next couple of years, this to become a kind of a assets class, which we can regard as something as the other ones. For now, it is really not.
I hope it doesn't. I hope it doesn't, because I mean, Forex, the foreign exchange started with this kind of dynamic, but then Forex ran into the global financial crisis, which wound up in zero interest rates, which killed the Forex market.
Yeah.
So obviously it's not interest rate dependent, but maybe it's regulation. I certainly hope it doesn't go the way of an accepted asset class. I hope it continues this way and breaks new ground and continues to drive the regulators insane. Like I love it.
Yeah, I just have one more info for you. I have looked also some of the findings of some researchers, and many of kind of our style, let's say, I mean older traders in the sense of being 10 plus years on the market, are switching to crypto space because kind of Forex is becoming really boring, and cryptos are making money. So more and more traders there, that's for sure. I mean, experienced ones.
Yeah. For sure. I mean, you get guys like Peter Brandt, who we've had on this show. He's a lifelong commodities corp trader. Which, if you're a trader and you don't know the history of commodities corp, and that's where all the best traders, the turtle traders and major hedge fund titans all started. Like, the fact that he is in our trading markets and our little industry is amazing. He's embraced cryptos. Like, I subscribe to his stuff. I have for years. And Peter Brandt trading cryptos, I think is awesome. Yeah, a lot of other guys like as well. So,
40 plus year commodity trader. It's amazing.
Yep, exactly. Yeah, it's all good, man. It's the Wild West, and I hope it stays the Wild West. I certainly hope they don't rein them in and regulate them. But at least, thank God. I mean, when I saw that headline this morning, Alex, and I was like, Elon pumps Baby Shark. I was like, are you kidding me? We have a Baby Shark. And I was like, please, God, no. But it's a production company. So I was like, oh, it's South Korea. I was like, oh, thank God. That was funny.
Yeah, I mean, we have seen that in some coins. The latest was in Shiba coin. That was a kind of a latest move. It went up incredibly, and the same thing, it went down incredibly. So I mean, it's a roller coaster, really. You must pick your favorites there, definitely.
Yep. But I've never seen Elliott Wave work so well. Like, in the early days of crypto, and I'm trading a whole bunch, I've never made so much money trading crypto with such a small account balance, because the Elliott Wave patterns were so clean. The moves were so big in terms of percentages. It was crazy. Absolutely. Just the best trading market ever seen.
Yeah, but the two factors are there. That's a small market cap and more emotional sentiment, and that's why Elliott works. If you have a larger kind of a market cap and a more stable market as well, and more fundamental news, it is going to be more difficult when you have less fundamentals and more sentiment, emotional one. Of course, it patterns beautiful Elliott wave patterns all around. So,
I mean, I wouldn't say it's a small market cap. I mean, we just lost. I mean, Google's market cap is 1.62. You know, all right. So I'm just trying to find, you know, what's $1 billion market or $1 trillion market cap. You know, we're not talking small market caps anymore. These are instruments with no real fundamentals behind it, so they're purely trading based on technicals. There's not a lot of algos in there slowing them down and taking the other side and compressing spreads. And that's what causes volatility in a market, is wide spreads and lack of market makers and liquidity providers constantly selling into every rally and buying every low. You know, there's wide spreads, which causes quick moves. And I think there's a lot more trend followers than trend faders in these markets, which do make them trade very well. Eventually it will get filled in, and you're going to have a lot of suppliers in there and dealers shrinking the bid-ask spreads, which will compress volatility. But it's a $1 trillion business right now. It's huge. And it was 2 trillion.
yeah. But 2 weeks back, it was a 2 trillion. Now it's 1. So I mean, now, for example, if you look Bitcoin market cap, it's now in a range going from 620 to 700 billion, fluctuating, and it was 1.2 trillion just 2 weeks ago. So I mean, it's still swinging. It's still swinging.
Yep. It's the size of, right now, the entire market cap of crypto is the size of Google. That's insane. 1.69 trillion market cap for crypto, and that's the size of Google. That's unbelievable. Okay, we're gonna wrap it there, guys. Good show. We're gonna roll into the member webinar in 5 minutes. I got to shoot a CNBC video, boys. So I'm Alex, and I've got to shoot one quick, then get to PT. Can you guys handle the member webinar?
Yep, we got it, man. We're good.
All right. Thanks, guys. Please hit the thumbs up if you don't mind. Throw a comment down below. Let us know what you'd like to see more of, what you'd like to see less of. Thanks for spending your time with us. Alex and Bennett, great job as always, guys.
Sounds good. Appreciate it. We'll see you guys next week. Take care.
See you guys.